an example. And that break even is known as the product mix break even. Okay, product mix means, let's suppose the company is selling three products, that is A, B, and C. Again, I have discussed this, that let's suppose this product B is not that much profitable or it is loss making. Then company is dependent on A and C to earn profits. And what if company think that if we discontinue the product B, it may increase their profits or it may reduce their profits even though product B was non-profitable. The reason is that the reason is of the fixed cost, because the fixed cost, whether to produce product B or not, whether they produce product B or not, they have to bear fixed cost at any cost. Means fixed cost will be shared by these all three products. So the main difference, whether to continue or discontinue the product or whether to achieve the break even, in this case, depends upon the product mix and totally depends upon the fixed cost. And this its analysis will be different than the usual analysis. Now let's suppose the three products have sale price per unit is $10, $20, and $50, right? And their variable cost per unit is 7, 15, and 11. So at this point, if I calculate their CM, what it would be? Its CM would be 3, its CM would be 5, and its CM would be 4. Done? Now the
Yes.
total fixed cost. Total fixed cost will be total, and it cannot be written here, here, or here. It will be written at the end, that is the total fixed cost that is borne by the three products production will be, sorry, dollar 240,000. And we have given the information of units sold. $25,000, $15,000, and $10,000. Then now we have to calculate what is required. Basically, the required is basically break even point sales and units. Number two is sales in dollar and in units of each product at break even point. Number three, margin of safety and margin of safety ratio. Now the approach for the solution of this question would be, first of all, we have to calculate, first approach, we have to calculate product mix. Product mix means weightage or ratio as per volume. Product mix as per volume. Volume means
Is it
volume.
the unit sold?
Volume means yes, either it is the unit sold or the quantity sold. That is the units or quantity. Done. Now, what is the ratio? Product mix. How we can calculate it? The ratio means the units sold of A are 25,000, B is 15,000, and C is 10,000. It means total units sold are what? Total units sold are how much? Hello.
Are you saying something?
I'm saying how much total units are sold.
Hello, can you hear me?
Yes. Now am I audible? Hello. Okay. Now, how many units are total units of all the products are sold? That is, it is 50,000. And now, if we want to
Yes.
calculate the percentage or weightage or the ratio of A, product A in the total, and product B in the total, and product C in the total. So, can you calculate it?
Yeah, sure.
How?
Uh, you just divide each of them by 50,000.
Yes, correct. So, we will write like this A, B, and C. This is 25,000. This is 15,000. And this is 10,000. Then the total will make 50,000. Now it is known as the ratio, mix ratio or weightage. It will be 25 divided by 50. So it will make 0.5. 15 divided by 50, it will make 0.3. And 10 divided by 50 would be 0.2. And the sum of all the weightage. Remember, this is the key. To ensure whether you have calculated it right or not, the sum of all weightage will always be 1. Then, if it
Yes.
is 1, then your answer or your weightage or mix ratio is correct. Otherwise, it is wrong. So, this was the first step. Now, for the second step, what we will do, we will calculate weighted CM. This was the simple CM. Now we will calculate weighted CM. And how weighted CM will be calculated? Just we will multiply the individual CM with the ratio, weight ratio. So it would be 3 into 0.5 for product A, 5 into 0.3 for product B, and 4 into 0.2 for the product C. Got it?
Yes.
Okay. So it would be for A. I am writing here for your understanding. You can do directly it later, but for the proper understanding, I am writing it here. That is 3 into 0.5, that is 1.5. Then 5 into 0.3, that is again 1.5. Then 4 into 0.2, that is again 0.8. Its total will be 3.8. It will not be equals to 1. Only the weightage, the mix ratio will be equals to 1 and weighted CM will be different. It's 3.8 in our case. Then at step number 3, we will calculate break-even sales in units. Now, what was the normal formula? Do you remember that? The normal formula for calculating break-even sales in points.
I don't remember the formula, but I know how to do it because I find the process easier than the formula.
Okay. So through that formula or that process, we usually use to divide fixed cost divided by CM per unit. That was the process. CM ratio or CM per unit. If we divide it by
Yes.
CM ratio, then we will get the break even in amount. And if we divide it by CM per unit, then we will get the break even units. So here the concept is same, but for break even point sales units for the product mix. For more than one product, we will do fixed cost. We will divide fixed cost with now weighted CM per unit. The only difference is that. Got the key point?
Yes.
Now our fixed cost was $240,000. So we will write 240,000 divided by our weighted CM is 3.8. So our total, the portfolio of product A, B, and C, the units that we can sold at their given prices will be 63,157 units. These are the break-even units. Now, here one thing is very important to note that this 63,157, in this 63,157, there includes the units of product A, there also includes the unit of product B, and also includes the product of C. Now the question arises, how much product of A, how much product of B, and how much product of C shall be sold in order to achieve the break even? This is the question. And how it will be determined? It will be determined that we will break this total break even units again into their this mix ratio. Then it will give us the individual units to be sold to achieve the break even. Got it?
Yes.
Hello, any issue?
No, I got it.
I think I have.
You cannot hear me?
I think I have
Hello?
my. Yes, I am. I can hear you. So,
Okay.
is there any problem till here?
No.
Okay, now we will split these break-even points into the number of units. So we will write like this. Product ABC break-even units. Now if we multiply 63,157 with its weightage, that is 0.5, it will become 31,579. You can check it with your calculator with your working. Is this the correct amount?
Yes.
Then again, 63,157 into 0.3. It will give us answer of 18,947. Is this the correct amount?
Yes.
Okay, now since this is a decimal, there is a chance of rounding off errors for the last product, whether it is the three product, whether it is four, where there are four products. What we do, we subtract the total from these two amounts. That is, we will add these two and then calculate the remaining amount from 63,157. That will give exactly the amount of units of C, and it will be, I think, 12,631.
Yeah.
Done. Now
Yes.
what this part is denoting, this part denotes the individual units of product A, B, and C that should be sold to achieve the break even. That is, the company will be in no profit and no loss. And how much we have to make the total sales in dollars, then we will simply multiply it with their unit sale price, that is 10, 20, and 15. We will multiply it. So it will give us dollar amount of break even sales, that would be 315,790. Please check it. 378,940. 189,465. Done. And the total amount would be 884,195.
Yes.
So this is the amount in units sold, units to be sold individually, and this is the amount of the total sales that would be achieved to get the break even. Okay. Now whether to, we will now check whether this calculation is correct or not. So we will prepare some income statement type, some statement type which will show our different sales revenues and costs in terms of CM and fixed costs, and our net profit should be zero. So we will do like this. It would be income statement at break even. What we will write is that product wise alignment A, B, C, and total. First of all, we will write sales value. This is the income statement is in dollar amount. Sales value that we have calculated here, 315,790 and like this. So we will write again this in the income statement, 315,790, 378,940, and 189,465, 884, 195. Done. Now we have to calculate variable cost and resultantly their CM. Can we calculate it? And
Yes.
yes. How can we calculate it?
Before we have the variable cost per unit, right?
We have variable cost per unit. Yes. So we will multiply the units with the respective variable cost and respective the CM, then we will get these amounts. So our first
Yes.
unit was, let's suppose 331, 579. It would be multiplied by 7 and multiplied by 3 to get these respective amounts. I am writing this. You please check it. These are the units. Done.
Yeah.
Have you note down this variable cost and CM? Just write on your notebook so that you can refer it. 7, 15, 11, 3, 5, 4. Or we can simply calculate one thing and we will minus sale and variable cost to get CM. Anything is possible. Done.
Yeah.
So first product A's variable cost would be 221,053. Isn't it?
Yes.
Then variable cost of product B would be 284,205. Isn't it?
Yes.
And then 138,941. Total would be 644,195. Are these calculations correct?
Okay, so you found the variable cost by multiplying the variable cost per unit by the unit sold, right?
Yes. No, break even, break even. Because we are making income statement and break even.
Oh, yes, so the break-even units. Yes.
Done.
Yeah.
Make sure you also know the calculations as well. That's why I am trying yourself to do it. Done.
Yeah.
Okay. Now what about the CM? This minus this would be CM. Either minus these
Yes.
two amounts, or we can calculate direct this multiply by
The
CM per
CM.
unit. Okay. Both will get the same
Yes.
answer. Our CM would be 94,737.
Yes.
Then 94,735.
One second. 4. Yes.
Then 55,24.
Yes.
And the total will make total. Tell me the total.
Okay. Uh, 239,996.
239,996. Can we round it off to 240?
Sure. Yes.
Yeah. Now, according to the pattern that we discussed in the managerial accounting, sales variable cost less, then we get CM, then what comes next?
The fixed cost,
Fixed
which
cost.
is 240,000.
Fixed cost is also 240,000. So what is our net profit?
0.
0. It means our these calculations, all these calculations are correct, and according to these calculations, we have got net profit 0. Done.
Yes. Yeah.
So the concept was, if the company is selling the product mix, different portfolio of the product, so we do not need to calculate even individual product break even like we did in previous examples and the applying the formula and just to add up, and we will say that it is the total break even units. No, its procedure is to split the sales units according to the ratio, calculate weighted CM, then calculate break even point sales in units, Then multiply by respective sale price to get the total break even in the dollars, and to verify, make the income statement. Now we have one more requirement, that is MOS and MOS ratio. So MOS would be, margin of safety would be sales minus break even sales. So we have got sales, how much sales? Total sales. For total sales, what we have to do? This multiply by this plus this multiply by this plus this multiply by this. It can be done in one go on the calculator if it is you have got scientific calculator.
Yeah, 1 second.
Just calculate and let me know.
Is it 700,000?
700,000. Yes. And what are the break-even sales?
8,000, 881.
884,195. What would be the answer of MOS?
Negative 184,195.
Negative is written as bracket in the counting. And what is it?
184,195.
Now this is the MOS. We will talk about the ratio later. Now see this calculation, see this amount of MOS, and would you like to comment anything about it?
Well, it seems that the sales is for the loss.
Sorry?
I mean, the sales, 700,000 is occurring at a loss when the 8,884,195
Yes,
is for the break even.
correct. To some extent, very good thinking. What this is showing us, that we are at the current level of $700,000 sales, and we are trying to get the break even sales, that is earning no profit and no loss. To get break even, we have to increase the sales, not decrease the sales. Usually what happens to break even, we usually decrease the sales. Now it is very alarming situation, that in order to achieve break even, we have to increase the sales. It means our current level of sales, our current level of products that we are selling at this different selling prices is giving the company losses, and therefore there is no margin of safety. Margin of safety means the amount which we can afford to lose, but there is no margin of safety. Here we have nothing to lose. So to achieve break even, company have to do more. So margin of safety indicates that without calculating the original sales amount, without calculating the original profit amounts, that it is indicating margin of safety, that we are in danger at the current level and we are suffering losses. And to even to achieve the break even, we have to increase our sales level. Done.
Yes.
And if it is this case, then ratio, MS ratio will not be calculated, because ratio cannot be negative. Then
Yes.
it's just like percentage. Nobody, you haven't heard from anyone that mashallah my student got negative 90 percentage in the matriculation exam. The percentage cannot be negative. Then
Yes.
okay, this was about the product mix. Now I am writing another question. You will try it as usual. ABC company has a uniform sales price. This is break in sales. A similar requirement that we had done in the earlier question. Done.
Yes.
Okay, I am signing off for this session. You do this question and then WhatsApp me, then I will check it. Okay, and
Okay.
I am posting the recording and as well as PDF of today's lecture.
Okay.
And next week, I need to discuss some general things about your syllabus and what will be covered in your semester so that I will take up the things according to that. So we will have initial 5 to 10 minutes discussion for that. If you have got that syllabus or the semester schedule, you can share it with me or just I will write the topics and let me know what you will be doing in the next semester. Okay.
Yeah.
So
Okay.
see you on Monday then. Allah Hafiz.
Allah Hafiz.